Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about HDFC Securities 5 stock picks for 2020. Now friends, their entire list had 20 stocks which were recommended, but to manage the length of this video, we have restricted this to only 5 stocks. Now friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button. This will help you get notified whenever we upload a new video. Please watch this video to know more about these stocks. Now the first company on the list is SBILIFE Insurance Company Limited, which is available at Rs 975.10 and the face value for it is 10. The symbol for it is SBILIFE. Now the target price here by HDFC Securities has been set at Rs 1230. Now SBILIFE Insurance Company Limited engages in the provision of life insurance. It operates through the following segments, which are participating, non-participating and linked. The participating segment offers participating insurance products that are designed to provide benefits over the entire life of the policyholders, as well as products that provide benefits over defined periods such as endowment life insurance. The non-participating segment comprises of individual savings, group savings and protection segments. The linked segment focuses on the benefit of investment as well as protection. HDFC Securities thinks that this company will outperform due to it growing at a very strong pace. SBILIFE's SBI channel is also outperforming in a very sustainable fashion, whereas newer tie-ups with banks like Allahabad Bank, Syndicate Bank, Repco, Punjab and Sindh Bank continue to be better than expectations. The margin expansion is also expected to continue by HDFC Securities. Looking at the one-year chart, this company has been on a beautiful uptrend and a lot of wealth has been created here. The company has a market capitalization of 97,510 crores, which means that this company is a large cap one. The EPS of 12.24 translates into a price to earnings ratio of 79.67, which is largely in line with the industry price to earnings ratio of 78.73. The price to book ratio of 12.87 is also on the higher side. The company is debt free with a debt to equity of 0. The return on equity for this company is 0.1614, whereas the dividend yield stands at 0.21%. The company has a strong promoter holding of 62.80%, where none of the promoters' holding is pledged. Now the second company on the list is AXISBANK Limited, which is available at Rs 742.95 and the face value for it is 2. The target price here by HDFC Securities has been set at 958. The symbol for it is AXISBANK. Now Axis Bank Limited engages in the provision of financial solutions to retail, small and medium enterprises, government and corporate businesses. It operates through the following segments, which are treasury, retail banking, corporate or wholesale banking and also other banking business. Now HDFC Securities says that they like the well-articulated strategic revamp so far post the top management change last year. Combining with strong liability franchise and product suite, reducing stress and capital raising makes Axis Bank one of their top picks for 2020. They expect a significant improvement in return ratios over FY21 to FY22, driven by a reduction in credit costs. Sustained reduction in reported GNPAs and decent coverage provides comfort to them. The recent Rs 125 billion fundraise also adds to the ammunition for the bank, as competition has been grappling with uncertain times. Now looking at the one-year chart, this company after an uptrend towards the initial part of the year has largely been consolidating. The company is a large cap with a market capitalization of 2,09,482.29 crores. The EPS of 16.59 translates into a price to earnings ratio of 44.78, which is expensive standalone, whereas when compared with the industry price to earnings ratio of 40.84, it's still okay. The company has a price to book ratio of 3.08, which is slightly expensive, whereas the debt to equity is 1.3684. The company has a dividend yield of 0.13%, whereas the promoter holding stands at 16.23%, out of which nothing is pledged. Now the third company on the list is Britannia Industries Limited, which is available at Rs 3038.80 and the face value for it is 1. The target price here has been set at Rs 3638 and the symbol for it is BRITANNIA. Now Britannia Industries Limited engages in the manufacturing and trading of food products. The company distributes under the following brands, which are Good Day, Tiger, NutriChoice, Milk Bikkies and Marigold, etc. Its products include biscuits, breads, cakes, rusk, dairy, and adjacencies. The company was founded in 1892 and is headquartered in Bangalore, India. Now, HDFC Securities likes this company because Britannia is India's leading biscuit brand by value market share. Over the last 5 years, Britannia has premiumized its portfolio, strengthened its distribution in the Hindi belt, and kept a tight lid on costs. Britannia is also now looking to leverage its brand names into other snacking categories such as cakes, rusks, beverages, salty snacks, croissants, etc. in order to become a total snacks company. Eventually, Britannia will focus on becoming a total foods company, and hence the addressable opportunity is large. Now, looking at the 1 year chart, this company has generally been consolidating throughout the entire year. The company is a large cap with a market capitalization of 73,073.51 crores. The EPS of 52.11 translates into a price to earnings ratio of 58.32, which is largely in line with the industry price to earnings ratio of 59.28. The price to book ratio of 17.05 is expensive. The company's debt to equity is 0.3714, whereas the return on equity for this company is a very strong number at 0.3446. The company has a dividend yield of 0.49%, whereas the promoter holding is just about average at 50.66%. None of the promoters' holding is pledged. Now, the next stock on the list is Infosys Limited, which is available at Rs 746.00 and the face value for it is 5. The target price here has been set at Rs 840. The symbol for it is INFY. Now, Infosys Limited is engaged in consulting, technology, outsourcing, and next generation services. Its segments are financial services and insurance, manufacturing and high tech, energy and utilities, communication and services, retail, consumer packaged goods and logistics, and life sciences and healthcare. HDFC Securities values this company because they think that this company is trading at a discount to its peers and a valuation catch-up is imminent. This company also offers a strong growth trajectory at a bargain. Besides this, they feel that this company will enjoy stable margins and the accelerated investment phase is now behind. Now, looking at the 1 year chart, this company has also not created any major wealth for its shareholders. The market cap of the company is 3,17,680.87 crores, which means that this company is also a large cap one. The EPS of 36.40 translates into a price to earnings ratio of 20.49, which is largely in line with the industry price to earnings ratio of 22.64. The price to book ratio of 4.89, however, is expensive. The company has a debt to equity of 0.0670, whereas the return on equity for this company is a strong number at 0.2467. The company also provides a strong dividend yield of 2.88%, whereas the promoter holding stands at 13.17%, out of which nothing is pledged. Now, the final stock on the list is Bajaj Auto Limited, which is available at Rs 3072.05 and the face value for it is 10. The target price here has been set at Rs 3530. The symbol for it is BAJAJ_AUTO. Now, Bajaj Auto Limited engages in the manufacture and marketing of motorcycles and three-wheeler vehicles. It operates through the automotive and others segment. It offers motorcycles, scooters, commercial vehicles, and related spare parts. The company is headquartered in Pune, India. Now, this company has been recommended by HDFC Securities because they feel that Bajaj Auto, due to its KTM association, is relatively less impacted by the emission standards rollover. It is geographically well diversified, with exports accounting for about 40% of volumes, spanning two-wheelers and three-wheelers. Also, Bajaj has clawed back to 26% market share in the motorbike segment in FY19, mostly owing to a changing product mix. This brought its share of pain but pulled Bajaj back into dealer favor. Corporate tax cut has also come as a relief to Bajaj Auto ahead of the BS6 rollover. The lowering of tax rates will partially offset revenue and margin pressures, particularly with the impending BS6 transition. Some pass-through for this company is visible via discounts. Now, looking at the 1 year chart, this company has not really had any set pattern for the entire year and has largely been choppy. The company is a large cap with a market capitalization of 88,895 crores. The EPS of 178.48 translates into a price to earnings ratio of 17.21, which is largely in line with the industry price to earnings ratio of 18.71. The price to book ratio of 3.83, however, is slightly expensive. The company is debt free and hence the debt to equity is 0. Return on equity for this company is also a good number at 0.2345. The company has a dividend yield of 1.95%, whereas the promoter holding is above average at 53.53%. Out of this, nothing is pledged. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.